Okay, g'day guys. Hey Pete, how are you, mate? I got your email by the way. I'll might take a quick look at it as a topic for today too, if you don't mind. I think it's very relevant in today's market where downside is supported and yeah, everyone's very bullish at this stage. Okay, so anyone that's new, welcome to Trade Setup. It's a live stream. It's the 9th of November. Okay, so welcome along. Feel free to join us on Twitter. You'll see the top left-hand corner. That's our Twitter handle, if you can see it there. It's at trade_setup. Top right is Facebook, and bottom right, if you don't forget to subscribe to us at YouTube. That's at Trade Setup capital AU. You'll see in the bottom right hand corner. Now, if any questions or anything like that, just feel free to send us an email to support@tradesetup.com.au, and we'll get to you as soon as I can. If there's any topics you want to talk about in different streams, just email them through, and we'll get into it. Now, let me just minimize. I don't forget to, sorry, general advice warning. So there's no specific advice. Anything I talk about is basically my opinion, what I think is happening, what I'm looking at, and things like that. So anything you do is up to yourselves and your own risk management. So, yep, better put that out there. So let me get rid of this now. I'll just get rid of this picture. There we go. And we'll get stuck into it. So at the moment, the market's, powering along up 109 points. If you go and look at the overnight markets, they're really chucking along strong as well. I think this is the the Nikkei. So look at that, just powered up. It's a couple of hundred points up from basically where it closed. I'll have to get rid of that. It's annoying. So closed somewhere around 23,350. It's now 820. It's probably been a touch higher. So it's a good 450 points, 470 points higher. So really strong, and that was a longer term. If you probably can get out to the daily, it may or may not work. Yeah, so you can see there's a clear level along here, which is just broken today. So I'd assume there's a lot of stops triggered, to entry stops, exit stops for shorts, just been cleaned out of the market. So there'd be a lot of people that would have thought that would roll over at that resistance. So I thought it might have struggled up there, the way it was acting. But yeah, we've got um, new president in the US, Biden. Yet Trump is not going to go away. He's going to go down with the fight. He's not doing your traditional. Um, I guess he's not sticking to traditional scripts from the US. He's not willing to concede. He's going to go to court. So he's doing everything he can to stay in power, and he's like a little boy having a bit of a tantrum, if you ask me. So yeah, that's what's the state of play over the weekend. Biden's in. The thing is, it's not a clean sweep for the Republicans. So a lot of people are looking at Republicans come in, that changed the tax laws. So coming into the elections, and with the polls the way they were, with the potential clean sweep for the Democrats, they were looking at stimulus, much more stimulus. That's why they're buoying the market, and the negativity potentially for more tax around is, that's probably what the market didn't want to see. Different changes to tax, corporate taxes, all that, companies pay more. So obviously, without the clean sweep, it does alleviate those potential problems. So companies have been buoyed, but I do think the stimulus is the key thing. I still think it should be. I think it should be the key thing. I think it is probably still the key thing. It's just we're getting sidetracked at the moment, um, and everyone's now in this talk. If you read the news, they don't know what's going on from left to right, from one day to another. So always saying that stimulus was the big thing. For a swift, once elections have come through, there's going to be a swift, especially if there's a blue clean sweep, which they didn't get. There's going to be a swift change to stimulus. It's going to get implemented in the way you go. But that's not the case, and I wouldn't expect the Republicans to be too happy about what's happened. They have retained, I think, the power. Basically, the numbers probably added a few more in was it Senate, Congress, whatever you want to call it. I'm not sure what it's called over there, but so that would mean that I think they've been against adding another 2 trillion for a while, and I think the market potentially is looking at this massive stimulus package to get through quick. Now, one thing with Trump chucking a tanty, he's not going to. I don't think going to concede anything. And what he doesn't get sworn in until January, I think early January. at best. So there's still a few months. So I don't know. The market is extremely bullish, if you ask me, for no particular reason. And there's still, some massive headwinds. You got what's going to happen with stimulus, and they're going to need stimulus too, because I don't know what's going to happen with lockdowns in the US. The coronavirus is getting out of hand. In Europe, it's spiking too, but it's just that it seems like it's really getting pumped up at the moment, and really any bears have been squeezed out of the market time and time and time again. And with this rally, there's no bears willing to stand in the way, especially if they got hit. So there's really one way to go at this stage until something changes. So I'm still looking at stimulus as it's a needed thing. They need it, and maybe the market is well and truly factored in 2 trillion. I don't know what they're expecting with that respect, and I don't think it's a good enough reason to say, okay, it's the tax problem, not tax problems. It's the tax changes they were concerned about. The market, if the market was concerned about it, why was it going up into elections? It was just a constant strong market. So if that was a concern, you would have seen it backing off, people locking away more gains, but it didn't happen. So to come after elections and say that's not happening anymore, that's why the market's so bullish, I don't think that's correct. Um, I think it's just the market's been the market. There's no other way to go but up at the moment. So it's really chucking along nicely. You can see that the Nikkei is this could be a massive flush of this resistance level. We don't know yet. That being such a big level on the daily charts, it's going to be a few stops packed in there, and once it's broken, it's going to trigger a few algos and a few bigger traders in action, buying, sweeping up some stocks potentially, and that's why you got this extension. I would expect through that level now. It'll be interesting to see whether it comes back, falls back down, or what happens. We go into the US. So the US is opened up around here. It's up about 300 points as well, 200 points around the four. So it closed somewhere around 340 or so. It's now trading around 640. So 300 points. It's gapped up on the open and rallied up. So it's taken out a few resistance zones as well today. And I think that was a lot of the the Nikkei open strength is due to this strength that's coming into Dow. But don't forget that's notoriously it's manipulated out of hours because it's easier, low volume, and so on and so forth. But you look at the Aussie market, we're looking at that's flush out of this support zone at 61.96 thereabouts, 6200. Traded down there, so it's a bit of a sell off into the close, which you can understand if it's not going to do anything all session. You expect a bit of a run on. Bullish or bearish, you probably wouldn't want to hold too much of a position over the weekend when you didn't know what's going to happen with elections. Is there still going to be problems with elections if it's a recount and all these sorts of things? I don't know. I mean, you can read any sorts of news on it. You can read any opposing sides in news flows. So at the moment, it looks like Biden's well and truly in. He'll be inaugurated. I don't know about 2nd, I think, of Jan or early Jan. I'm not sure what the date is. But the market's certainly very positive at the moment. So that's the SPY. Powered long and powered high, so a bit of a flush, 62, and then bounced through, pushed straight up through 62.26, and really hasn't looked back at all. It's been quite strong. So all markets across the board seem to be very strong at the moment. The Hang Seng's is gapped up. I'm expecting that flush to that level. Wouldn't mind seeing it back off, retest this 25,793 area before it sort of chucked its way high. Now, I wouldn't expect it to just smash up. I wouldn't expect it to get up there in that 26,833 zone. That's over 1,000 points away, or basically from this support. So I think that's probably the next target. If we start to hold up and we retest over, this session tonight, and we hold this zone at 25,793, then there's going to be some bullish action. We'll look for higher lows to work our way up to this zone about 1,000 points higher. And just again, it all depends on what the US does. US dollars sinking, so that seems to be factoring in. It's just going to keep chugging away, factoring a bigger package or in with regards to stimulus. I think it was a bit of an unknown. Now, and this is the thing, I don't see how that's changed. If it's an unknown come into the elections, because you weren't sure who's going to be the victor in the way of not so much Trump and Biden, but more Republicans and Democrats. So for me, not much has changed. The status quo is pretty much similar, like we're saying, except for Republicans could put on a few more votes. I think I've got a few more seats, or whatever you call it. Which, if they're opposing a massive package for stimulus. I don't know where they stand. I mean, we knew where Trump stood. Actually, no, we didn't, because he was jumping around so much. He was talking about no, no, no. We want a smaller package. And he come out and said, no, that's it. We're going to go bigger, bigger and badder. And that's all that election stuff. Coming to elections, he was just tweeting out whatever he would think the market wanted to hear at the stage. So where their party stands on stimulus, not sure yet. I know there was a lot that are opposing another, $2 trillion. So would that make it, if those numbers are increasing, does the Republican Party want to see a big package and to keep adding to their debt, the debt burden? I don't know how that's going to work out. So if that's the case, then how is stimulus going to come through too quick? And I think the market's going to need it, because that seems to be what we're banking on. Continually supported the market. It's got nowhere to go but up, because you just keep pumping money into it. There's nowhere for the money to go but into the stock market, pressing prices higher. Now we're all factoring in. We're not waiting for it to come and then rally. We're factoring it in now. And probably if nothing happens, we'll keep factoring in. We'll just keep chugging higher. But yeah, it's going to be interesting to see how that plays out. But either way, I mean, these markets are heading higher. They've been grinding up, doing quite well. So let's take a look at with any positions. We've got about 4 positions at the moment. We've got, this is on Ethereum. If you're into your cryptos, that's going quite well. Looking at a partial up here at 75, I think I put it in that. 75, there you go. Up near previous highs. You can see these are the previous highs, and then it backed off from there. I'd rather lock away some gains and then just tighten up the risk. If we do lock away some gains, and it was looking like it was tentative there, look, we may move the stock back down, because we're going to be at break even at best. We don't want to lose money on this at the moment. If it does pull back from here and we start to hold this level in here, which is below this zone, I'd rather be out with some gains. Okay, so that's pretty much the way we're playing Ethereum. The only other positions we got, a new one today on AAC at 115. It's backed off since then, but it's looking quite positive. I like this support through here to dollar. Starting to lift here. That's the weekly chart. The weekly's looking quite good. It's primed and ready. And the daily, after this move up here back in September, that sort of rally up to about $17, $18, I think it was, high of 17. We backed off, chugged away, a bit of a flush lower back on, what was it, 28th of October, end of last month, before pushing higher again. So if we can, keep holding that inside level, I would expect that to get through the 17 high, and then you start looking at previous highs back from February at around the 130 mark. So that, for me, is looking pretty good. And if this market's so bullish, we should expect that to close on its highs. Well, close up towards its highs. It's backed off, like I said. There's probably a seller that's just dumped something in there, but still, for me, it's looking quite good. We've got PNV, which is chucking away okay. It's getting up in these highs, and it may be getting a bit tentative. You can see on the weekly. I'm pretty sure you can see that. If you can't, just let me know. Oh, month year. Oh, no. So anyway, previous highs somewhere around the 275, 280 mark. It's just up there now. Potentially it's getting extended. So we're going to have to think. We're up. We're up probably 20 cents on that at the moment. I would expect the way this market is, the power, I want to see it get through that high. And I think with this kind of action, with this nice higher lower on the weekly, if you take it from the low to high, it takes us somewhere up to the highs at 325. So I'm happy to book if it can pop up through here to 3, book some gains, and then just tighten up the risk and see what happens for now. So that's the only other position. Either way, that weekly looks quite good. You got this big sell-off here. It took out the previous low, but that was when the market was caving in. So that potentially is extended. You could say that that's just retested support, even though it flushed it out. So any new positions are reset. So if I think it's resetting, we're starting to look again, like I said, through this lower high in here, because we're at the high low working in its favor now. Markets up, MAs are up, everything's looking quite good. MAs on the daily and the weekly are both up. We just need to see some volume come in and start ticking away through that $3 mark up towards the highs at 325. I think it's 325, 328. So I see if we can test up there and potentially break it over time. The only other position is NEC, which has been chucking away really nicely now. I do think that's extended. We've tightened our risk up quite a bit on that one, and we've taken a partial already. So that one's well and truly in profit. I think we booked about 12% on the first half, and we're up about 30-something% at the moment. Let me just check. I've got that somewhere else. About 24%. We booked 12, so at 233, we're now it's about 231. So yeah, that's going nicely. I do I do think we'll probably get stopped out with a stop around 220 and just, like I said, tighten it up because we're getting extended. You can see this move up here, this good move before we had a pullback, reset and gone again. This is a second leg up, quite extended after pushing through these highs at around 3. But see, you don't really want to close things out because it looks extended. I mean, that's just guessing where the highs and lows are. And if you're going to trade off guesses, it's not really trading. It's just it's punting. So you'd much rather just let that go, tighten the risk because it's a really strong market. It should probably just keep pushing higher. Now, if we do run the steam up, so run some sort of resistance up around 260, 240, 50, and we start finding resistance there, you could probably expect some chop or a decent pullback after that. And then you can always reassess it and reset later on. So that's the way we're playing that one. So at the moment, that's all we got. Looking for some positions to add, to jump into. I mean, there's some shorter term ones, there's some longer term ones, but the structure there for me has to be, off the daily charts and then seeing what it looks like on the weekly, seeing if there's some prospects of some really higher prices because there's the outside chance, even though the market's up, we're up about 100 points at the moment, we've been a bit higher on the ASX. There is still an outside chance that stimulus is a new concern. We've got, like I said, rising COVID cases in the US, the surging, in Europe surging. We're going to further lockdown. What's that going to mean? And if we start looking at some things where they're factoring in lower demand, like crude, for instance, crude oil's backed off. We were up on Friday night. Markets were doing quite well. Yes, we did. Did we take AAC? Yep, at 115. So 113.5 at the moment. So down a cent and a half from there. Probably bought it a bit early, but it broke and it was looking strong, looking good. So where was I? Let's just go over to. So I do 2 things. I'm just going to run through today of where I see the markets are at. What are our risks? Because bullish or not, you've got to know where your risk is. And I was looking at something. I don't know if anyone knows SMB Capital. It's worth following them. Get on YouTube, give them a follow, and they got some good videos. And they know what they're doing, obviously. But they have some really good videos that they put out on on trading and what you should be doing, what you should be looking for. And the one I was just looking at was on risk. So there was a story about a guy trading stocks. He's trading short and blew up his account. And he basically says, I wasn't trading normal, and he had no idea where his risk was, and he was fighting the market. So we all know what it's like. You don't want to be proven wrong, and this is why I become more of a technical analyst than a fundamentalist, because for your fundamentals you read so much and you can do all that, put in all that work. You just naturally don't want to be wrong because you're putting so much effort into something. So if if you think it's going to be a buy and you buy it and it goes down, you don't know why because all your research is saying it shouldn't. I mean, who cares? You're not right. The market's always right. Up, down, or sideways, the market is always right. And if you just remember that, then you try to keep your biases out of your trading. So, I think it's very important. That's why with technicals, I would always look at it. So if it breaks here, I want to get in. If it goes down here, I want to be out because I don't know what's going on. And right or wrong, I mean, there's times when you get stopped out and you're kicking yourself. You hate it, but that's why you have your stops in there. And that's why I trade off my technicals because, you're stupid to think you're always right. And I wouldn't say stupid, it's probably a harsh word, but it's pretty much what it is. If you think you're going to be right all the time, you're nuts because you don't know. There's always someone out there that they might have a lot of stock or whatever, and they want to sell. They just want out. They're booking their gains, right or wrong. It doesn't matter why they're doing it, but they are doing it, and they're forcing the market down when you think it should be going up, or you're forcing the stock down. Whatever it is, it's coming down, but you all your research has said it should be going up, and you're trying to fight it. You're trying to fight it. You're trying to fight it, and essentially you either that sentiment can change everywhere. SMB, B for Braden, SMB. But have a look, John. I'll just put it in the chat. So yeah, it was a really good thing. So this guy had obviously gone out and shorted. He'd had success shorting, and I think he was a while before that. He was basically long biased. Do his study. It was going up. You buy it, away you go. And I think he kept seeing these shorts, the overextended markets, which happens a lot in the US. They can just go power on, and they get extended because there's a lot of shorts. I think there's a lot more shorts in play in the US than there is obviously in Australia. I mean, in Australia, we always say ban CFDs because the short sellers are killing it. That's absolute garbage, in my opinion. But it happens a lot more in the US, yet things will go up a hell of a lot more than they go up here. So maybe shorts, you should have more shorts in the market if you're a bull, because it can actually trigger big short squeeze. So there is opportunity over there on the short side. So that's what he saw, and he started jumping in, short selling, and was having some really good success. Had a couple of bad trades as well, but then he got onto this one trade recently. I don't know, it was sometime during this year when COVID was kicking off, but what happened, his error, and it's pretty clear when you're watching it, is that he just had no idea where his risk was. And it was like I was saying, he's done all the research and he had all the thesis, why it should go up, sorry, why it should come down, this, that, and the other. Yet he didn't put enough emphasis, I don't think, on COVID. And he had his opinion. So he was formed by doing all that research, he formed his bias into the market. And by forming his opinion, what he's reading, and who's to say what you read if you've read everything? And that's what I just don't understand. There's so much information out there everywhere. You're never going to know everything. I mean, you can have a good opinion, but even you've got to realize you're not going to know everything. So putting all your hopes in your study or in your research can be fraught. And yeah, okay, 9 out of 10 times you're probably right. Maybe your timing's off, but still, there's gonna be about one time if you sit there and you really, like this guy did. He said, most of the time I'm right. My entries could be a bit off, a bit early, um, but he still did not factor in the fact that he could be wrong at all, and he blew himself up. Pretty much lost his account, and he said he was doing quite well, grinding away, being consistent over the last few years, and in one foul swoop, because of negligence, ego, whatever it may be, just blew himself to pieces. So I think it really does highlight that risk in this market is very important. And I mean, we bang on about this all the time. You've got to know where your risk is in any one trade. You don't know whether the market's going up, down, or sideways. And I suspect if we see a big sell-off, we're not going to know it's coming. I mean, you've been knowing it's coming the last 6 months, and it hasn't. If that makes sense, the market keeps chugging higher, and you think, what's going to trigger it? It's due for a correction, da 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 da. But it's not. I mean, what sent it down in February, March, is worse now. It's not sending it down. The market is higher than where it was back then, in the US anyway. So, that just it highlights you don't try to be right or wrong. You just try to trade what you see and you react to it. And you've got to know every time you get into a trade, where is your risk levels? Especially now, I mean, you don't want to not jump into a stock, for instance, because you think there's going to be a pullback. You can be left on the sidelines, and I think that's been a bit of a problem for myself personally. Is I'm not seeing any clean setups, but I probably haven't been as hard into those, looking for those setups. And it's paid by just being a raging bull. It's paid out because the market has gone up quite well, and it's just continuing to chug higher. So if you just bought into stocks a handful, well, loaded up into shares a while ago, you've been proven right. Right or wrong thing to do, but you've been proven right. So I've probably over assessed the risks into the market. Now, maybe I'm still going to be right. I don't know, but really it comes down to, okay, we've got this big thing of, what do you call them? Elections out of the way. What does that mean? What does it mean to stimulus? Stimulus, the market needs stimulus. It's been rallying on the back of hopes for stimulus. What's going to happen there? Those hopes haven't changed, have they? They couldn't have changed, but the market's still going up. So is the market saying now there's definitely going to be stimulus, it's going to be soon? I don't know. And what if they're disappointed? What's going to happen if they're disappointed? The market could have a massive sell-off. So we're from here, I think what we should be doing is just looking at what's happening in these markets, what's happening in the shares. Even though this is the S&P, the S&P's bounced that quite hard. It's right up the previous highs. Now it's not broken up into anything new, any new highs. It's just pushed up into highs, so it's squeezed out all these shorts in here. But really, this action here looks more range bound than anything else lately. Is that going to continue? Are we going to find, it's going to be a bit of a trap where you trap in some longs and then turn around, we smash them, you get squeezed out. We don't know that yet, but we do know that if you do start to pull back and we start to hold this high level in here, there's a good chance we're going to break up to new all-time highs in the S&P, the big S&P. Now, where does that sit with the Dow and everything? Let's go look at the Dow. Dow, to me, much the same kind of action. Same, and you've got this action here. Just because we put a line there doesn't mean it's right. And this is on a daily chart, by the way. But that action there over a bigger time frame on this daily is more sideways bound. And if we start to hold this level, if we don't start to pick up, which we probably will tonight, considering the Dow's up quite a bit, we might hold this resistance zone up here at around 29,000, well, 29,000, just for argument's sake, even number. We might pop up here and start to sell off. We might pull back and hold a high low and then rally. You don't know what's going to happen, but risk is this doesn't look quite as bullish as what we led to believe the last few days. And it could be that a bit of a blowout top, dragging the bulls in, because just after the elections, everyone's going, okay, we're just going to continue on down the same old road, rallying. And then we've had a good couple of days, and then the market turns around and just sinks like a stone. Everyone's scratching their heads because they put together their thesis, what's happening, and it's not playing out the plans. They go, okay, we're just going to have a bit of a pullback, and that bit of a pullback turned into a complete sell-off. So we've got to know where our risk is. If we start to break down on the Dow, back down towards these lows and start to take out these lows, something is not quite right. And the S&P, if we start to, chug down here and hold lower highs, if we do something like this and we start to hold these lower levels, then yeah, that's not looking too crash hot, I wouldn't think. I'll draw that in. And we could be doing something like that. And if we start to hold a lower high in here, and this is, don't forget, this is a double, it's essentially a sort of, we call it a retest fail, if Jason's on. Retest fail, double top, this little minor level through here, just below the all-time highs. And then we start holding a lower high. That's not conducive to continuation up. That's more potential starting, some cracks appearing, but it depends. It could easily come back down to support and reset and restart again. So that, it doesn't mean that we're going to have a massive sell-off, but what it does mean, we have to be careful, because the next level down is this key support zone through 32.45, say, and we want to see what happens there. Now, if it just plows through there, okay, we've got a bigger problem on our hands, and because then you'd be looking at something retesting, and then well, if we can get that, some bigger weakness happening, playing out anyway. But if not, we've got the reverse scenario. If we sort of back off from here and we start holding these inside levels, look for the higher lows, and then we start working our way back up into new all-time highs. Now, what's going to drive that? I'd say stimulus, because free money, chuck it in the market, and away you go. Where else are you going to put your dollars? Devaluing the US dollar as well, because you've got more stimulus coming in. So to me, it still hinges on a $2 trillion package. And I think the way this market's reacting, it's factoring in 2 trillion. I just don't see how they're going to get it without a fight, or it's some sort of compromise. And if they're going to compromise, have we factored in too much? Nasdaq, same sort of scenario. Europe, all-time highs up here. We failed there before. We're potentially getting back up there and extending back into that same zone, which is around 12,185, thereabouts. That market, it hasn't broken to the down, it hasn't broken the trend up yet. It's just basically consolidating. So we might spend a lot of time consolidating these highs, and we start to break out again to the upside. But again, what will drive that higher? That's what we're to question. So if we go and look at some other things, we've got a lot of the markets that are linked in. I mean, even your cryptos, everyone's saying, cryptocurrencies have another bull run. They're not really. They're really another currency, and the currencies are purely linked to the US dollar. So look at Bitcoin, for instance. We're on the back of Ethereum, like I said. Bitcoin has broken out. That will drag in a lot of, your keyboard warriors to buy that. But then it's really a US dollar based move to me, because US is heading south. Now, if that US dollar, we don't get that scenario where there's going to be more stimulus, we start to fail at these lows and react back up again, then yeah, they're gonna head down. It's going to be a massive squeeze on Bitcoin or your currencies, anything linked to the US dollar. But at this stage, that move down is suggesting that some strong stimulus is back on the cards, which, like I said, I'm still trying to work it out now. I'm still just waiting for headlines. If we go and look at crude oil, we'll go down to crude. To me, that's not very conducive of a very positive market. I mean, at the moment, that daily doesn't look too bad. And you've got to look at it like that's what we're drawing there from high to low. We found support in here, found resistance in here. So if you extend it out, grab that volatility projection, and it's taken us down to this support zone, which the market reacted up and off that. Now, if that's the next leg down, we could be looking back down to $30. We don't know that just yet, by looking at the daily. So we'll move that back. There you go. But yeah, that crude, even though the markets were up on Friday night, crude wasn't. Crude actually backed off. So we've got to a 30-minute chart. Actually rallied up today. I didn't notice where we were, 38. So where did we open? So 10 o'clock, it's been rallying since. So that's all that euphoria back into the markets after we've confirmed that Biden's win is one. But the thing is, this was Friday night's action. It headed south. We've got this projection into those lows. So really, as the market is crude saying a different story, where they're expecting a bit of a easing on demand because global viruses of numbers are going up again, especially in Europe and the US. Does that mean that there's more lockdowns? The US economy is going to, what are they going to do? Now that Trump's not in, who are they going to go back into lockdown because when he doesn't come in, or is we having a bit of a last ditch pushed higher because everyone's expecting Biden to start going into lockdown again, or they're going to do something about the rising COVID cases? And we know what Trump's done in the past, so why is any of that going to change just yet? And he's always been an advocate to not going to lockdowns, get them back to work to take the pressure off having to hand out more US dollars. So that's sort of suggesting that stimulus is not going to be as good. It's not going to be. It's going to be prolonged to get any sort of stimulus package, and he's not going to go into lockdowns. Which, yeah, okay, that's okay, but there's going to be. You don't know what's going to happen with with anything over there. It just seems like it's doing completely the wrong thing, or we could be throwing a bit of a curveball and he does something in the coming days. So yeah, that's with oil. Are we starting to factor in a low and easing demand? Look at copper. Copper, even though it was up, it wasn't quite as strong as what I would have expected, considering the US dollar, but it is still chucking away in the right direction. We might find a bit of heat come out of the market at 320, up at the previous highs, but still, that's not saying the same thing as oil. But we'll have to wait and see what happens in the next couple of days. Oil, you just got to notice, just off the shorter term, we've got some little inside level which we might find a bit of resistance here, a bit of resistance here. It's going to get through a couple of levels. We could back off and start to fall apart again. It might be just pre-European, pre-US session action, and we back off from here, and then we start heading south. And you don't really want to see it get through 3650 if you're a bull. There might be a bit of a meltdown into there, and what's that going to do to equity markets? It's traditionally linked to crude oil as well. Well, it used crude as a bit of a yardstick for sentiment anyway. So that's pretty much what I'm going to go through. I know gold, the gold bulls are out there clapping their hands, but that again, it's just US dollar based. So if the US dollar is doing a bit of a suckering a few people in on the short side, and then we turn around and have a massive long squeeze, what does that mean? If it keeps going down, there's no, we don't have to worry because that's going to keep helping commodities. Commodity stocks are doing well at the moment. Resource stocks are doing quite well today. Anything linked to the US dollar is finding strength. So that doesn't change anything. What will change it is if the US dollar has a massive squeeze on the upside. And that, to me, is just going to be related to stimulus. Now, if it doesn't move, there's no talk on stimulus, and we're kind of keeping it quiet for a while, then I think the trend is your friend. US dollar keeps heading south, markets will keep chugging away up, and your currencies, just keep doing the same thing. Euro is up at a resistance zone at the moment, and floundering a bit up here. Look at the Aussie. Aussie's doing probably a lot better. Is consolidating these highs. Have continued to consolidate these highs, and the US dollar heads south. And to me, the US dollar heads south. I mean, equities will head higher. This will probably take out these highs at 72.90 and then keep pushing its way back up again. And then we're looking up towards 73.40 and then up to these highs back to that zone around 74.20 thereabouts, 374 even. Yeah, so that's on that. Now, any questions? Anyone else's views? I mean, it's good to be bullish at the moment, but just be wary that if you're a raging bull, if you can't tell that you're a raging bull, you could have some problems. I mean, not to say you're going to, but it's good to know where your risk is on any one trade in particular, and then just have a bit of an opinion of the overall market at the moment. It just keeps chugging away higher. We go over to. I just want to talk about what's knowing your risk and I think we had a good question from Pete. He sent through an email just asking about re-entering. Now, I've got no qualms in re-entering. I just haven't really focused on that at the moment. There's been a few that I got one in particular. I think it's AMI. No, it wasn't AMI. It was Linus. Linus. Yep. So this is the one Pete was talking about. I think we had it somewhere. We had it somewhere in here, and then again stopping out with this push lower. And now, and he was asking, do you re-enter? Do you look for a new entry? Yeah, of course I do. Not worried about re-entering something because I've been stopped out, especially if it looks like it's, I just got caught in a bit of a flush. I had my stop in the wrong place. There's all these sorts of things. So I think the entry was, I think the entry was on that day, if I'm right. Let me just check that. Oh, it's on the 15th of the 9th. Yep. So the entry was on that day there, and we had our stop at 250 by entry, and basically finished down slightly that day. Next day was looking good. Next day, no. Next day, good. And you can see what happened. It just started to tick off, and the stop was just below this at around 230, I think it was done at, and basically touched that, threw it one day, and that was it. That was a low. We got tagged that a few days later, a couple of weeks later on the 30th, and then basically it's headed up since then. So that structure, it was just really caught in the flush, and momentum's still up. You've got MA still up. Everything's looking good still. We didn't re-enter at all, and I didn't send out any alert. I wasn't too confident with the elections and everything that was happening. We're not going to see a meltdown. I'd rather just, with the overall focus of what was happening, I personally was happy just to leave that and, look at other things, look at some better setups. Because I always feel if things are going to melt down, the last sort of stocks you want to go in is something that's been going up strong for a while. I would rather get in, just trying to, if I can show you something here, on a prime setup. And what I mean by a prime setup, when you have a push up, a pullback, pullbacks met, we've got some chopping around high, low, and it's starting to go so well with this setup here. So this is where we got stopped out. This setup here is kind of in an extended market. You can see it's coming off a good little run up the last few days before that. So if we happen to get in here and we were flounder around here and the market went into a bit of a meltdown, these ones that have been going strong for quite a while, I tend to see them get hit a lot more, get hit a lot harder because everyone's a winner at that stage. And if it turns around and fear starts gripping the market, they can get smashed. Whereas something that's, for instance, has always been coming down, it's starting to set up down here and you get long from a setup after a big flush lower, they don't tend to get smacked as much because a lot of the heat's already come out of the market. So it makes sense. So that's why I get a bit concerned and re-entering and things like that. Even though that, momentum's up, market's looking good. That trade in this zone was basically at these highs. We're coming into some resistance as well. So that's my concern if you're looking at, for your re-entries. But, as it's played out, it's played out quite well. I think the market's been a lot stronger than many have thought. So, I mean, that's probably what wouldn't be a normal factor, but at the moment, it's kind of a real, well, it is. It's a real bullish market. So maybe it's worth, you take your setups again. So yeah, with regards to Linus, I think that was a good little entry there. You know exactly where your risk was. If you took the break on this, basically this day here on the 19th, you got your re-entry. There was really nothing before that. We got this flush out. That could have been a retest of these highs, then failure again, and we start to get, we get a lower high in here, and you can see the market was extended all the way through here. Even when it broke higher, it was extended, and we had this little pullback. Some sellers come in, didn't break where you stopped, could have been just below that level at say 260, and you took the break, maybe that high, what's that high there? Break at 275, you're in at say 276, 277 with your stop down around 260, for instance. Not massive stop. You weren't put under, well, you put under a bit of pressure, but didn't tag the level. You were still in, and then you're sitting on, it's up at 320 or thereabouts now. So it's played out quite well. And that was a legitimate, I think, a legitimate re-entry. It was just, would have been tough with a stretch market, but the volume, you can see that the volume was still coming in on these pushes up, on these rallies. Pushes up is not really English, but you can see what I'm saying there. So that, there's nothing wrong with re-entries. I think there was, now AMI is another one I'm just looking at. I've got to remember where we got tagged on that one. 55 down to 48, and we got down the 29th of the 10th. Was that right? Yeah, 29th of October, which was here, this day here. And we got, again, we got tagged through this low where our stop was, done on there, went a little bit lower, and it's bounced back since. So although it's frustrating, there's no reason why you can't, take a re-entry. I don't see this as yet as a re-entry, but if we go and look at the weekly, I want to talk about two things on this one. I'll draw it up. The daily doesn't look so crash hot. I'll mark up the key levels on that one. But this is certainly one that I'm not going to, although I do get frustrated like anyone. You get stopped out. You don't chuck your little tanty and walk away and then say, I'm not trading that ever again, because it could be you got stopped out at the wrong time. Yeah, fair enough. And then it takes off like a rocket. And because of your bias towards it, or your, how do you say, your aggression towards it, or you just, you turn it off because you got stopped out. That's trading. If you trade indices or anything like that, you get stopped out every day. If you're trading, a couple of times a day, you're bound to get smacked a couple of times at least. Well, you can have 3 trades in a day and get stopped out 3 times. So you've got to get used to it. And it does kill you if you get too many in a row, but still, it's the nature of the game. So if I go and just draw up what I'm looking at on this here. So that our thesis, oh, that's not really so good. The idea behind that, I can't remember where we bought it now. That wasn't, it's probably not quite lining up as well. Okay, so that was it there. We bought somewhere in here and it's turned around and stopped us out. Okay, so we've got to realize that we've had this sort of rally up. We're coming back to support. It's starting to lift off support. That was okay. Everything was good. So the reason behind the trade was pretty good. It didn't play out. We got this sell-off here. I think the markets themselves were coming under pressure there. Elections. Now we know what's going on. It's a buy the room, so sell the room, buy the fact. It's starting to bounce back. So this is your leg up. You're focusing on it. It's broken down a bit, and we may start to reset here at this level. Now, if I just take that out, just enter when price recovers to original. No, I still want to see the setup, because it's just taking it from me. I wouldn't buy just when it gets back to the same level, because you've got a lot more information since then. For instance, say we bought here, we're back to the same level roughly, up at these highs. We just bought up at those highs. You've got all this information here. So who's to say that it's not going to be a resistance zone? You buy and then you turn around and get stopped out again. And we go straight through the support and we go back down to test this level at 30. Okay, so you've got to use that and just treat it as a new, for me, I would just treat it as a new trade, purely a new trade. Now, there's going to be times when you see it recover, you're in, you got stopped out, it bounces back. Well, that's the way I attack the markets anyway. If it bounces back and you don't get in, so be it. I would rather stick to my plan, stick to my rules, and then just keep trading the same setups over and over again, whether it's at higher price, lower price, it doesn't matter. Because I think if you're not taking into account that information, you're just randomly buying. In saying all that, I don't think AMI looks too bad, to be honest. We'll talk about that in just a second, but I think well, look at this, for instance. Say you bought the break here. All right, you bought here, you turn around, you got stopped out with a push below there. You go, okay, that's it, I'm in again. And you bought it again at the same price. Look what happened after that. You just got stopped out a second time. Now, there's no reason to buy that at that same price, because it hasn't really, it's just sideways action just there. Okay, from here to here, or in this zone, we're really just getting some sideways action. And it's just broken out the bottom end of it, at the bottom of that range sort of bound action. All right, so what I would rather see here, and I would get more tentative, because if I had a theory that was going to rally up from there, we're going to go, and then we're just going to go dunk, dunk, dunk all the way up. If that's my theory and it didn't play out, I've got to remember, ego plays a big part of this game, and I could be wrong. I don't know why. I don't believe it, but what I'm seeing is that I'm wrong. I've got it wrong. I've got to try to reassess why could I be wrong. What could I be looking for? So if I was going to trade that for a second time, that's really not, that's not a push up. We've retested this low. So this support is still in play. And this becomes my new level. Okay, I also got new information there. So it's just a touch above where you bought it originally on the break of that level. Okay, so that's more information. So I want to see from here this little expansion into that zone. Okay, that's great. That's fine. I want to see it go through. I want to see what happens on the first pullback. First pullback gets soaked up at a higher level, then I'll look in to buy, because then I've got confirmation there that we're starting to lift off that support. Okay, but if you just simply buy it in that back into the same price, you're not really taking into account the new information, and you're sort of neglecting what's just happened. And obviously we know in hindsight we got stopped out. Now if you keep holding that, actually where are you now? You're probably up slightly from there. Does that make sense? So that's why I would treat it as a brand new trade, for whatever reason. That's what I was looking at, that expansion there. We got that, and then we turned around and failed straight away. We didn't even get up to this high. So what I'd be looking at is to go, okay, let's reassess that. We've got to take into account that I was wrong. Why? Let's get the new information, and then let's reset up a new trade. So what do I want to see in the new trade? Honestly, a bit more confirmation, probably because I'm being a bit more careful into the second trade. I'm not being as aggressive. I want to see a bit more information because I was wrong before. I want to be proven that I'm going to be on the right side of the market. And by doing that, by letting that pop, see what happens on your first pullback, the MAs are probably going to be starting to, if I can draw that, starting to go up from there, and you're going to sit back on top of the MAs like this, that sort of action. We start to see that on the MAs on the first pullback, then you can be confident that once it starts to head higher again, then it's going to get a run on, because it's that price action is a lot clearer, not only to you, but to everyone else that's watching that potentially got stopped out as well. Okay, so that, is the way I would attack that anyway. But so if we go back to, let's just clear all this up. All right, back to this trade. So now I'd probably be looking at it something like that. We didn't get a bit of a run on from here, and I'll be looking at that going, well, are we going to break up, or are we going to fail off here? And I've got to reassess basically redraw my lines. And I'll be looking at this. Okay, if we're going to, I like that setup. I don't mind that at all. We've had, that was the action before. It didn't play out. We're basically consolidated. So the market will go, we go up and down like that, Dow theory, whatever it is. Now we've had this leg up here. If we didn't break down and we did rally from here, that's all part of the one leg on a bigger time frame, say a weekly chart. We're on a daily, I think, now at the moment. But the fact is we've had a pullback. So on the weekly, we're seeing this. On the daily, we're seeing, up, down, up, down, up, down. And we're seeing this, we're into this stage or this phase of the weekly, and we could be just doing this on the daily, down. So if that's correct, then how we're assessing that, we want to see evidence that the market's starting to break up again. So is it that we could see this support zone hold at 45, basically right where our stop was, thereabouts? We start to see that hold. It hasn't shown me anything just yet. The good thing is, if you go to the weekly, that weekly, I'll just make that a bit bigger, sorry. That weekly, it actually looks really good. So you've got this move up, this is your contraction. So we've got expansion here. That's just sort of your leg down. We're expanding back up with our first pullback. What's happening on the first pullback? We're starting to reject. You can see on that day, and these lows in here, low of 46, close was 46.5, and we've closed again at 51. So, sorry, that low, that open 46.5. So you're looking at the low of this candle. We broke through it, we flushed it out, and then we finished back above it. That's always a good sign. Okay, so on a weekly basis, we're starting to look good here. We still just got to worry about, what we're just drawing up here. So if that's the case, I'm looking at this as a bit of a flush. That push through the low. Okay, so if that's the case, then what do I want to see from here? Simple. We've got the market here at the moment. Just change colors. If I don't mind seeing it pop up, and then see what happens in that first pullback. If we get something like that, great, because we know exactly where our risk is going to be. We've got the market sort of broken out, and it could break out, get through, I think it's 55 thereabouts, through 55. If you can understand my drawings, gets up through 55. It doesn't mean you just buy it on the break. If you buy it on the break of 55, fine. You're going to put your stop right down below here. Okay, so that's why I'd be looking for that push up through there. You're probably going to get some more selling coming in, because people might, especially if it stalls up there, people who have held from up here and they're watching it stall and go back down again, they're looking at it differently. They're looking at it from fear. I don't want to, I'm just going to lock in as little loss as possible, and it comes back down, but then he gets soaked up again at a higher level, and that's ideally what we want to see. Buyers start step in, buyers start stepping in, and you see it start to break up through lower highs, and that's ideally what you're looking for. And then we could get another re-entry on that. So yeah, that's one that we got stopped out in. It's early days yet. Potentially, it's early days yet, but it's still on the radar. Whereas obviously Linus should have been on the radar, but it wasn't. Played out okay, but yeah, there was definitely a re-entry in Linus as well. So does that make sense there, guys? Any questions? Just what I'm talking about. I won't get into looking at some stocks today. I'll just. I think that was a good point by Peter. How do you attack it? Yeah, I attack it just like a new trade. I think it's a good way to attack it. Reassess it, because you really do. If you're wrong, you probably need more information as well. If you're right, then it's fine because you're right. You're right. You're right. Um, but yeah, the markets will do what they've got to do. When they're not ready to go, they're not ready. You just got to either suck it up. If you put your stop in the right place, you might be underwater for a bit, but that's fine. If your stop's in the wrong place, you're probably going to get tagged on it. It doesn't mean you're wrong on the trade, on the direction. It just means that you might have to reassess where you're putting your stops or where your risk is in this trade, and then reassess it, get a bit more information, keep it on the radar, and then look to re-enter if you have to. All right, so I think there's a few more. I'm looking at ORE. I think that's quite good. You look at it's a weekly chart. We're starting to see, reacted off this zone around 240. Same sort of thing. We've got this little uptrend here, decent pullback. Probably due to elections and all that, sort of bit of heat coming out of there. You don't know quite what's happening. The US dollar is rallying there. It's probably pressured. I don't even know what they do, to be honest. Materials. Yep. What do they do? Gold, lithium. Okay, so put a bit of pressure on RRE, but now it looks like it's found support at 240, which is basically above previous support around $2. You got this $2 zone. A lot of heat's coming out there, so a lot of heat coming out there. We're starting to find some support coming in at higher levels. Then we're just trying to assess. I don't mind it through $3, but I think what I'd like to see is a pop up through $3. The pullback. What happens on the first pullback? Because you buy it through $3, you sort of got your stop at 240. Is that too big a risk, or you can have too small a position because you've got such wider risk, or can you potentially exactly like this? You can see in here. Where am I? Where's my little? I'll just draw out that entry. See what I'm talking about here. Let's just draw a few pretty lines on that. So it's something like that. That's where we're at the moment, minus the bendy lines. We've got this kind of scenario. All right. You buy on the break. If you bought on the break here, your risk is going to be here. You can adjust it, after a few days, but I would rather see that smaller risk, bigger position. You've got this kind of thing playing out. So, oh God, it looks like it's going to do exactly the same thing. So just be wary we don't, if we do pop up here and you buy through $3, we might see another high low, just a small push through $3. That's $3. You get this little pullback, and then you can buy. I think you can have a much bigger position on there with the same, smaller risk, but you're trading in the same trend. It just means that your risk reward is going to be a lot better than buying, say, at $3 with a stop way down here, because that's the most recent lows. And if you bought here, you don't know. At that stage, when you bought it in here, for instance, on that breakout through this previous high, I'm talking about this one just in here. Your risk is going to be down there because you don't know if it's just going to get stuck in a range, bit of a flush out here, get stuck in it, going to retest those lows. You don't know if it's going to go lower. But as soon as you get that high low coming to play on top of the MAs, it's a good sign of strength. Okay, if we get that, then I think ORE is going to be a good little buying opportunity. But this expansionary day today is, it's probably going to get it when you're up 100 points in the ASX. Sezzle's another one that debating on. Is it Sizzle? Sizzle? Good name, Sizzle. I just think it's really just about the entry. And again, this is one that I've got to stop my biases from playing out, but you've got support in here after this, you know, flush out here. Yeah, nice little flush there. I'll just draw that up like my arrows now. So really, are we looking at this? We haven't really had a pullback. We're just grinding up. I'd rather see a bit of a grind up. What happens on the first pullback? Again, up, pullback, go, buy the break, know where your risk is, and then see if we start attacking $9 or even up to $11.50. Okay, but I think that one's worth keeping an eye on too, because you can see that that trend is up. We've had a big flush out with that move down, flush out. Basically, a day or so later was up above that low. You know, even this low, we're starting to hold higher level, pop up here, pull back, buyer stepping in. We pushed up here. We've got a move all the way back down, so we've got to retest. So it's not ready to go just yet. But that looks to me like it's going to break out of contraction. So contraction lower. We're looking to buy into expansion. Okay, so we just really with this one, it's just keeping an eye out for an entry setup. Even if it's something as small as where am I? No, here. A little couple of red candles, then you're buying the break. You got risk, maybe something bigger like that. That's all fine. All right, so that's pretty much it at the moment. Any questions there, guys? Anything you want to take a look at? Actually, I won't ask that because it's been about an hour now, so we'll probably finish it up there. If there is any questions or something you're desperate to have a bit of a look at, then just shoot us an email to support@tradesetup.com.au. And just remember too, if you haven't subscribed to YouTube, subscribe. But I think there's I never quite know, it's an alert button. If you click on that, I think you get alerted to anything that's going to be put into the system. So what I'm starting to do now on YouTube is set up the stream to just automatically start, but in an hour in advance. So I think you should get a notification from YouTube itself saying stream coming up at 12:30. Otherwise, I think you're just relying on the push notification from myself and or through the alert service. So yeah, that's everything, guys. But anyway, we'll finish it up there. Thanks for joining me. Like I said, any questions I haven't answered or you're desperate to find out, just shoot us an email and I'll get onto it. Otherwise, have a good day, and we'll speak to you probably next week. Cheers, Pete. Enjoy. Cheers, John. We'll see you all later. Cheers, guys. Bye.